All right, we're jumping in here. Mark, this is kind of, I don't want to say it's funny because it's not good.
Well, if
to
Kirk
say
was here,
it's
you
funny.
would think it was really funny.
Kirk would think it's hysterical, but run us into the world of wind.
So Orsted had its call today, and there was an announcement this morning or afternoon, Danish time. They are proposing or launching an emergency rights offering. And like a lot of other wind companies have run into the buzzsaw, not only of cost inflation, higher interest rates, and supply chain issues.
Let me do this just real quick, cut you off, because I actually worked on one of a rights offering back when I was at Stevens, 30 years ago. A rights offering is the financing of last resort. Basically, what a rights offering is you are going out to your shareholders, and generally the way it works is, let's say you think your stock, and it's usually you're in trouble. You can't find anyone else to finance the business. You go out and you think your stock's worth $10 a share. You price it at $2 a share. And usually you have some large shareholder, in this case, it's the government, that's willing to buy.
They're the backstop.
They're the backstop to this thing. They're willing to buy more of it. And you're literally putting a gun to your shareholder's head and say, get the hell diluted out of you unless you cut another check. I mean, this is not something that's good.
Well, the only one we know who's going to exercise their preemptive rights to not get diluted is the 50.1% majority owner, which is the Danish government.
Yeah. So this is kind of a taxpayer funded bailout, basically.
Yeah, and the real, I guess, trigger project to this is something called Sunrise Wind offshore of Long Island. It's about 30 miles offshore from Montauk Point, and it's even closer to Martha's Vineyard. It's only 19 miles from Martha's Vineyard. So kind of wish Kirk was here, but he's off in Scotland doing golfy things. But the rights offering sized at or targeted at $9.5 billion is more than half the market cap of Ørsted today. And
that's like bad wrong.
Yeah.
It's not just a little bit.
Stock's down 30% on the day. And Javier Blas was tweeting quite a bit during the call, and he pointed out one, I guess, somewhat unfortunate exchange on the call. The CFO was asked apparently a question about what Ørsted's net debt position was. And the answer was, paraphrasing a little bit, I don't have that off the top of my head in a public call. So not a good day for Ørsted. It's just really more of the same. And then really the kind of the overarching theme here politically and from a potential regulatory standpoint, clearly the Trump administration and President Trump himself has been very, very negative on wind, whether it's offshore or onshore, certainly in the U.S. And so a lot of headwinds here, a lot of crosswinds for Ørsted to navigate. Oh, by the way, one other thing. I think it was 9 months ago, Equinor took a position that was close to, I think it was 398 Danish kroner per share. They've lost $1 billion in that position to date on paper. So, we'll see where this goes. But, given what's happened with Vineyard Wind and the pushback that we're seeing in general, I think there was it Lava Ridge, which is in Idaho, was a, I want to say 57,000 acre project that was opposed by everyone. But since it's on BLM land, that was kind of rammed through to approval under the Biden administration, the IRA. And so, you've got some friction building here that's going to make it really, really tough for the other 49.9% of Ørsted shareholders to come in and say, we're going to go ahead and take the plunge and exercise our preemptive rights and participate in this rights offering. So it'll be interesting to see, where and how they get that done. The rights offering in and of itself wasn't a surprise. The size of it was about double what was expected.
At the end of the day, I've never been a wind guy. And, my good friend, Andy Karsner, who I went to Rice with and is now out at Google, I believe, doing energy stuff and is on the board of Exxon. He's always been a wind guy. So I need to get him on the podcast to actually explain the economics to me. But everything I hear anecdotally is you build these projects and in 10 years, you got to go replace all the blades and just cash on cash. So take tax subsidies out of it. You haven't hit payback yet, and at the end of the day, it's all government subsidies that get these things built and keep them operating.
Well, that's the thing. In the comparatives, when we talk about certain classes of renewables being touted as lowest cost, what is lowest total cost over useful asset life or project life? Look at ERCOT. We've got tons of solar and wind. We've got 13 gigs of battery storage that has been very rapidly put in the gen stack. And what is, I think a wind turbine or a PV panel is certainly got a shorter useful life in terms of replacement than certainly a coal plant, nuclear, or even a combined cycle gas-fired generation plant. And so what is my total capital cost over a 30 to 40 year time frame, and how does that compare with the advantage depreciation of an asset like a combined cycle gas plant that can last 30, 40 years, if not more? And my fundamental on all this is that energy density, which wind and solar don't offer competitively with just inherently the BTU content, for example, of natural gas or the capacity factor of nuclear, you consume more land, significantly more land. So there are trade-off type of impacts that I think weigh into how people view the total cost. But this is a pretty high-profile moment for the biggest wind player out there, and we'll see where this goes, and maybe they get this rights offering done, but it's a pretty high-profile example of kind of what's going on.
Yeah, and I mean, ultimately, and some may disagree with it, but I think where you have gone with this under the Trump administration is, hey, we're not opposed to anything. We're just not giving special favors anymore to folks. And so markets are going to win out.
Well, I would say the president's opposed to wind, personally.
Oh, yeah.
So,
well, but he's opposed to it on economic grounds. It's not I just dislike wind and I'm going to go bash wind.
He doesn't like the aesthetics either. He's talked about how.
Well, I think he's using that to sell it.
Yeah.
Because they do kill birds. Let's be fair.
Apparently, Anschutz has one that's on the table for Wyoming, and it's even bigger than Lava Ridge. I saw, there's a real threat to the golden eagle population in Wyoming from wind turbines, as well as I think they had estimated like it would kill 6,300 bats a year, something like that. I guess it's like any kind of simulation or modeling. You kind of make up what you don't know.
Yeah, garbage in, garbage out,
right.
Potentially. But there we go. Yeah.
All right. So on to Trump and oil prices. Yeah, we don't need to spend a lot of time on this, but crude was as weak as it's been this year. I looked at the 5-day price graph for WTI, and we've had pretty much a down and to the right for the entire week. A little bit of strength this morning. Had pretty good DOEs on Wednesday, where production on on the 9/14, U.S. oil production held in flat relative to the prior month, where it had declined 100,000 barrels a day. But you had an uptick in refinery utilization for this week, or for the prior week. It was reported on Wednesday, to an all-time high of 97%. Increase in exports, decrease in crude imports. And so stocks, at least on the crude side, were counter-seasonally a draw again, but that fundamental support wasn't enough to, I think, offset the headwinds. We're coming to the end of the summer driving season, where, worries about demand are cropping up, and then worries about supply, as it relates to, at least the way I read it, was, there's this, is it on or is it off? Putin and Trump are supposed to meet in Alaska, and saw something yesterday. Zelensky's, saying, "Hey, me too. I'm waiting on an invitation to this Alaskan summit. You can't make any decisions about Ukraine without me there," which I think is fair, but it's just all part of the market mindset that anything that indicates that there's going to be some kind of resolution where we see Russian barrels more freely back on the market. I think they've been trading just fine.
Yeah.
We just don't see much of the dark fleet.
It's the Casablanca. I'm shocked to see gambling here.
So in conjunction with that, I characterize the earnings season that it's essentially over as fairly unremarkable. Drilling efficiencies are showing up. Companies on the positive side, I don't know if it's a positive or a negative, holding on to their maintenance level of CapEx. Diamondback did say they were going to cut another $100 million from their budget for 2025. So directionally, rig count's still creeping down. Caution among the producing community, and the way the TPH note characterized it was, companies surprised to the upside with efficiency gains apparently offsetting lower activity and spending. So we're keeping production up. Wait, don't we want production to contract on a macro level?
Yeah. So a couple of questions here, and there's probably not an answer to any of this, but when I look at oil prices, what is Trump giving OPEC so that they're willing to increase production? I mean, why is that happening? And you're seeing Saudi Arabia come out against Hamas. I mean, you're definitely seeing a warming up to the West. Is it literally just the opportunity to invest here and have normal economic relations? What's going on there?
We talked about this back when he made the trip to Saudi. I think he went to UAE, and there was one other.
Yeah, it was like the Beatles coming to America.
But the headline, or the official reason for the visit, was to drum up all this regional investment in the U.S. and came back with some huge number. I think the Saudis committed by themselves to $600 billion, and at that time, we had predicted that there was going to be some backroom meetings with the Saudis as really the de facto leader of OPEC and OPEC Plus about, hey, can't we do a little bit more with this accelerated restoration of the first tier of cuts? And that's what you've seen immediately transpire. I've said it before. I wrote a little bit about it. I think the scoreboard points or headlines going into a ramping midterm election cycle, that I've got a 5 handle on crude. I've got, in some cases pushing to sub $2 gasoline. That is a big campaign win. And so, there are a lot of things that
I'm not sure it matters these days. I haven't crunched the numbers in terms of what does oil price truly contribute to the economy, inflation, et cetera. But at the end of the day, it is the daily scoreboard that every American voter deals with, and so when you fill up that, whether it matters what the price of gasoline is or not, you feel it.
Whether it's in a Raptor that gets 13.4 miles per gallon and a 36-gallon gas tank, or a hybrid that maybe gets 50 miles a gallon. You do it with enough frequency that you think about it.
Yeah.
But in reality, consumers are getting a bargain akin to what they got 20 years ago. It's been one of the best bargains out there.
No question.
In terms of refined product and gasoline in particular not being truly inflationary. Now we go through these short-term ebbs and flows or spikes and collapses, but it's just something that is so visible on a daily basis. And if you don't think it's that relevant or that important, the real downside to this type of political tactic, if you will, has created a lot of damage in the domestic industry, particularly for the upstream players in the OFS. And so I think
Scott was asking, how does this affect the small guys? And it's like, it's shitty on steroids.
Yeah.
Yeah.
Also depends on what your kind of financing health is. And, are you drilling out of cash flow? Are you levered? Relative to 5 years ago and 10 years ago when these smackdowns occurred, starting with the OPEC surprise of Thanksgiving of 2014, balance sheets are, for the bigger players, the balance sheets are in much, much better shape.
You know what my line about Thanksgiving of 2014 was the whole time I was fundraising? Usually it's the Dallas Cowboys losing that screws up my Thanksgiving. This year it was OPEC.
Have you seen the memes about the technology, the cell phones that were out the last time the Cowboys won a Super Bowl?
Ooh, no.
Those big brick cell phones.
That's funny. It kind of hurts. But I think, and I don't know that I have a really good solution for folks. I mean, I've kind of been sitting here on the sidelines, me and you on BDE going, guys, we knew Trump was going to do this. Hope you were hedged. And oh, by the way, get your ask ready for any type of activity that can help you because he'll let you do that. But I don't know what I would say to a small operator right now other than just hunker down.
Yeah. I continue to believe glass half full on longer term fundamentals. I think U.S. production is not going to prove to be kind of the on-off switch that it has been related to shale. And I think the scar tissue that the operators have gotten both from a volatility standpoint and then, when are energy equity is going to be relevant in the market again relative to their earnings contribution, say, sitting here at 3-ish% of the S&P. Now I know that's hugely skewed by the Mag 7, but at the same time, 2013 energy was 13% of the S&P, and we've not been able to get into that, and it may never happen.
Well, and more importantly, or equally as importantly, is the percent of the S&P 500, but also it was union jobs in swing states, i.e. like Pennsylvania. And so, I was talking the other day with someone and they were saying, hey, is political risk, this is a non-energy person, political risk, how does that work? And I said, well, it's kind of a crazy story because if you go back to the Bush administration, you could arguably say George Bush is the most conservative president we've ever had. And I'm not trying to talk politics here. I'm just saying, let's categorize it that way. And his approach was EPA, hands off, let the states do it. And we had the shale revolution. We had natural gas. And then the Obama administration came in, and you could arguably make a case Obama's the most liberal president we've ever had. Again, not playing politics, just putting a label on it. And he went with the same way. Sure, the EPA got a little more involved and did some tweaking here and there. We're going to talk about one of those in just a second. But for the most part, kind of left it to the states. And it was union jobs, et cetera, that was like equally as important as the weighting in the S&P 500.
Yeah, when he started his second term, Obama started his second term in 2013. So 2013 to 2017 was kind of the
oil
the go-go days,
oil shale
the real
revolution.
hockey stick on U.S. unconventional growth, and the Saudis and OPEC getting surprised and doing what they did in 2014 because they saw it as a real threat. And there's still, I think, some arguments as to whether that was a market share move or not, but they wanted to keep short cycle as well as long cycle investments by non-OPEC off balance because they are a meaningful supply threat over long periods of time.
So what happens in Alaska? You got Trump and Putin sitting there. Questions: does Zelensky actually show up? Give me an outcome. Do we end the war? No big deal. Somewhere in between. What do you think?
I think the likely most positive outcome is you get some limited ceasefire. I don't think the intractable issue of territory concession or territory give back is going to get any kind of traction with respect to resolution.
Yeah.
And so the best that I can hope for, and I'm not expert in geopolitics, and certainly in this negotiation have done some reading over the course of the history of NATO and what the issues have been, and a little bit about Ukraine and its path and the years that have gone by in its independence. But I think chief among them is that Putin wants one. I do think he's a throwback empire guy. I also think that having NATO aggressively and rapidly expand to direct Russian borders is certainly, from the Russian perspective, perceived as a threat. But I do think it's key that they maintain control of land access to the only ice-free port that they have access to is Russia in the Black Sea. So I do think the territorial impasse is going to continue to be not getting to full resolution.
Yeah, the thing I can't figure out, and again, I'm not an expert either when it comes to all this. The one thing I've heard that, at least in my mind, explained a lot of what we've seen to date is, and I wish I could remember her name. She was a Soviet Russian scholar, studied this her whole life. She actually said, starting, in the Obama administration, Putin has done a lot to, in effect, sanction-proof his economy. So he built a wartime economy. He sells a lot of energy to finance it. People work, etc. And so her point was sanctions aren't going to work on Putin here. And that's really all we've got. We're not going to go to war. We're not going to put ground troops in there. We're not going to shoot nukes at each other. And so sanctions is all we've got. And she said, they're not going to work. He has sanction-proofed his economy. And so that really, if that is the case, if that is true, then what's going to happen in Russia is Putin's going to say, how much land do I get? That's not enough. See you.
I mean, if you're nominally restricting supply, and I think we can see how effective or ineffective 18 rounds of sanctions have been in this conflict. Said it time and again, a producer-dominated economy like Russia is, the way you really hurt them is you flood the market. And so with the market near balance and, inventories today globally are below 5-year averages for the most part. Again, it's more of a demand angst and climbing that wall of worry. But I think physically, the fact that you're spending globally in upstream CapEx at such a low rate from where you were kind of run rate 10 years ago, depletion is going to come see you. And projects take longer than you think. We talked about the big BP discovery offshore Brazil last week in our little quick hit. But, those types of ads are decades in the making. But offsetting that, Exxon started its fourth FPSO in Staybrook about 4 months early. So that adds another 250,000 barrels a day or thereabouts. So
what city in Alaska are they meeting in?
I don't know.
Because I've been to Homer.
I've been all over Alaska, so
it's nice in the summer.
Oh, it's great.
Yeah.
You can work all night.
The only thing that's weird is, so I land in Homer and go to a bar to see a buddy who's playing in a band. I may have had too much vodka that night. A recurring theme, I think, here on BDE. But anyway, I step outside at 1:30 in the morning, and I literally fell to my knees and said, "God, I am so sorry. I will stop drinking because it should not be light outside." That was kind of freaky. But other than 22 hours of sunlight and having to sleep in rooms with, in effect, boarded up windows, it was gorgeous.
That's great.
So,
well, try a winter or two up there. I spent a couple of winters up there.
Not happening.
Learned what light therapy was all about. Didn't need it, but I thought it was actually kind of cool. But it was only I knew there was an end to this experience.
Yeah, wouldn't work for me. All right, jump to the EPA and CO2.
Yeah, so this is all part of the wave of permitting reform, rollback, streamlining, and really repealing some of the things that were embedded in the IRA or codified in the IRA, and even before that. And so the EPA is proposing that we repeal the 2009 endangerment finding. And what that means is that CO2, along with methane and some other gases, were deemed to be an endangerment. And there's another kind of add-on term that doesn't come to mind at the moment. But essentially, the agency put into effect in 2012. It was an Obama EPA administrator, Lisa Jackson, put into effect the agency ruling, a regulation that essentially created all the things like the EV mandates, the emission standards. So, the opposition to all this is out saying, since that time, we've spent over $1 trillion in compliance and regulatory costs and litigation, et cetera. So it's not a trivial amount. And the first step is to release the automotive industry or the transportation industry from CO2 being classified as a pollutant. We've talked a lot about it on previous shows. We talk about CO2. It's plant food. It's not a classic or conventional pollutant, but the challenge is being made on the notion by the administration that because of the science that was used to support classifying CO2 as a pollutant, is that it was classified in a mix of other gases. And the endangerment finding relates to public hazard and health. And we all know that that's kind of mushroomed into the broader, very provocative and sometimes religious debate over climate. And so the classic definition of a pollutant is something toxic that causes all kinds of public health issues. And what they're saying is, we can't, you presented the findings that or made the determination that CO2 is a pollutant, but it was a part of a mix of things, and you can't attribute what is specifically related to CO2 consistent with what's required by something that is subject to the endangerment rule, if that makes sense.
Yeah, no, I mean, this is the one thing I wish we could do, and I know this is a little Pollyanna of me, but at the end of the day, I wish we could everybody could sit down and go, can we not spend $1 trillion on lawyers? Please tell me how spending $1 trillion freaking dollars on lawyers is helping the environment. Because it's really not, There are probably practical solutions to a lot of things that both sides could agree on. Again, this kind of gets into the discussion I had with my dear friend Kelly Mitchell when she came on the podcast.
Remind us who that is.
So she used to be with Greenpeace. She's been arrested handcuffing herself to coal plants and is just delightful. I adore her. She's so cool. And anyway, so we probably don't agree on anything, but I think I kind of told you the story. I said the story of us meeting is she reached out through Twitter one time and just said, hey, like, can I just talk to you? And I'm like, sure. I'm driving to Telluride tomorrow. I got 18 straight hours in the car. You can talk to me as long as you want. And we just chatted. And to her credit, she was very thoughtful and asked a lot of really good questions on stuff. And it was more curiosity as opposed to, I'm going to take this and try to beat you over the head with it. And her point that she makes or the 2 points she makes are, hey, big oil lied to us. You can debate that, but there's some truth to that. I mean, we weren't, I don't think we were the tobacco industry, but at the same time, yeah, maybe we covered some stuff up. Then I think number 2, her point is, we have to stop everything today, because my whole point is, let's just get a little better each day. If we can build a new pipeline that gets rid of that old one with holes in it, that's better. And her whole point is, unless we shut it down, we are going to have this catastrophe. And she truly believes it. It's not a something with her that's made up. I mean, she truly believes we're going to see this if we don't shut it down. So,
I mean, have you ever lived by a natural gas pipeline right away?
No.
Okay, some people do. And so the notion that, there's hazardous material in terms of explosion risk, flammability, or in liquid hydrocarbon, you've got spill type risk. I will say one thing, and Arjun Murthy has been very good at emphasizing this in his Substack since he started writing 3 years ago about the messy energy transition, is that, the industry is not a victim here. It is accountable for things like fugitive methane emissions. There are things that industry should be more proactively doing and is more proactively doing to mitigate pollution. And I've said this before. I wish we would kind of reframe the discussion more apolitically and talk about pollution. Nobody likes pollution, right? It's not kind of the carbon singular objective on either side, but the industry is starting to take more proactive steps to be accountable for, look, if we can be incentivized and have good economics on capturing carbon, let's do that.
Yeah. We're
pretty good at putting stuff back into the ground, for example. So, and to your point about Greenpeace, and good people with those organizations, in a somewhat limited experience with the NRDC, they were typically very thoughtful and very good to work with.
Yeah.
In my past experience.
Interesting. Hey, real quick before we jump over to Exxon, Michael Cortez has a question. With all the M&A going on, most colleagues are worried about their jobs and or being made redundant. Do you think we'll see more people leaving the industry? Do you think we will see more mid-size operators grow and create more jobs? What's the career playbook for our job market?
So first I'd say go watch the Power Hour I did with Yoshi, who was a recent casualty of a major in the Permian.
Right.
and, some of the pivots and some things that she was doing, over the last several years to expand her own portfolio, network, and skill set. Do I think if we drag along here, I think downside prediction TPH is making for 2026 before we get back into a more balanced or tighter market is mid-50s crude. So I think that risk is there, and companies are going to continue to look for ways at the margin, although there have been some pretty big restructuring and layoff announcements. I think looking for areas where you can leverage your skill set, because what we're doing here, for example, at Collide, we know very well that there's a lot of need. In fact, it's critical to have the domain expertise alongside, all the digital things that are being built.
Yeah.
And so,
the thing I'm telling my kids, and I'm telling a lot of people, is AI is a game changer. I mean, it really is. I've seen 3 technological holy cows in my career. It was the internet, it was the shale revolution, and now with AI. And I'm also saying, and this is really important, AI is not going to take your job, but somebody that does your job with AI will take your job.
Right.
And so wherever you are in your career, go start playing with Grok, go start playing with ChatGPT, figure out how you can leverage these tools, because these tools really are going to be game changers. Anytime there's big new technology, we always overestimate it in the short term, but we way underestimate it in the long term. And this is going to be a fundamental shift to our lives, similar to what happened with the internet. And I mean, who would have thought back in the late 90s we'd all have these really smartphones that we all sit around and stare at? I think AI is going to be so embedded into our lives that if you don't know how to use it, if you don't know how to make yourself better with it, you need to do that. I do have a big worry, and I'm going to wrap 2 big worries together. Basically, Michael's big worry is, hey, with all this consolidation, downsizing, are we going to lose all our jobs? I worry about that too, because I worry about losing that expertise. And at the end of the day, energy is the key to life. Energy is the key to national security. So we need that expertise in-house, domestic. As much of, and I'm kind of a free markets type guy, I can get pretty nationalistic when it comes to talking about energy. And then the second thing that I'll say is I really worry about how we're going to create the old crusty folks that know a lot of stuff, that can put their hand on a machine and go, here's what's wrong with it, in a world where we're using AI to do the simple task. Because it was building those models, it was spreading numbers out of 10Ks and 10Qs that taught me the business. And so I think that's the big challenge for our industry, is figure out, how do we maintain the tribal knowledge? How do we teach the tribal knowledge in a world where the technological platform for doing that has totally changed?
Yeah, and the institutional knowledge that in the 40-year expert that walks out the door is not transferred, especially if there are fewer succession type roles to follow. I'd say, I'd certainly reinforce the point that you need to get as conversant, and fluency is probably a good goal in terms of what is your proficiency with whatever AI tools to make your the application of your value, your skill set better and faster.
Yes.
More accurate answers. It's grounded with more data, and there's all kinds of training offline, online that's available. I'm counseling my son right now on kind of augmenting his business finance skills. He's a rising junior in college, and we're looking at things like energy finance and trading. But you ask Grok or ChatGPT questions about what does the future look like and how, what kind of impacts are AI going to have. And it'll drill down to a certain level of granularity that's useful. And as a research analyst, I think about how we used to do things so manually, like building models. And when you picked up a company for coverage, the best way to learn the nuance of the company, both qualitatively and quantitatively, was to sit there and build the 5-year quarter by quarter history by literally transcribing all of the line items from the financials.
Yeah. And then you start toggling them on the projections. And
Right.
that really teaches you stuff. This is
but it sounds so cliche to say, but it's absolutely not. That, back to the point of getting us conversant and ideally fluent, doesn't mean you need to know how to code and build all this stuff, but understanding, at a pretty deep level, appropriate applications that are within your field of discipline or area of subject matter expertise that can allow you to do the real thoughtful value add and do more of it because you spend less time doing the mundane. Right.
Yeah. So this was interesting. So, in terms of being out talking to folks, how they're using AI, one company who shall remain nameless, I think, is very progressive on the AI front and their utilization of it. And the guy that's in charge of it's been really cool. He'll hang out with us, we'll chat, and I went down that rabbit hole with him in terms of I'm really worried about how we train the next level of crusty old people. And he had an interesting point. He said, I agree with you, Chuck. I've actually brought it up with HR. We need to start figuring out, how we train younger folks. But there's actually a voice within that company that is saying, to some degree, if we lose all the tribal knowledge and we have young, smart people with AI tools and looking at data, it might be better to take a fresh set of eyes to everything. And I don't know that I agree with it, but it's hard to argue that, I kind of see that point. So
it's like trying to fix a bad golf swing.
Yeah.
Right. If you've been doing it that way for 30 years, maybe there were some critical flaws that you won't ever learn in the first place if you start with a fresh foundation and launch pad, because you can. I spend a lot less time doom scrolling now and actually doing curiosity queries on things that are relevant to our scope of stuff that we talk about and do around here. And, having insights faster, having some level of credibility or expertise or insight on subject matter that is increasingly finding its way into the energy conversation. I mean, 5 years ago, did we think we'd be talking about, E&Ps doing off-grid power generation to energize data centers and AI? Mm. No. But if you know something about, turbo machinery, or if you know something about, the complexity and sophistication of what it means for a generation facility and all the different protections and equipment that you have to deal with literally millisecond fluctuations in 20 to 30% of your power load because of the way the chips work in certain processes, those are important things to know. And so from E&P, I would look for players that are more progressive and they're thinking forward like that all the way back to your original admonition to the E&Ps. Go talk to Silicon Valley.
Yeah.
There's an arbitrage, for example, for turning Waha gas molecules into something more valuable by generating an electron on site. And, that has nothing to do with the grid. It's just the value of that power generated by gas is way more than putting it in the pipeline and selling it in a traditional way.
Yeah.
And so E&P companies that are looking for that, kind of learn skills forward that are connected to your core skill set if you're an upstream technical professional. The other thing I would say is, with all the network, are there teams out there that have been displaced en masse that are really good executors that, and this is in your realm, bringing a deal to a private equity sponsor, particularly one that's raised, in some cases, a couple of the big names have had funds that have closed at record levels. So there's going to be capital looking for good opportunities. And so if teams of really good professionals can go make it happen, bringing that deal to PE sponsors is another pivot. I know it's a different risk threshold for a lot of career corporate technical folks in the oil and gas industry, but that kind of risk taking, especially early in your career and at a young age, is when you ought to be doing it.
That's why you're in this freaking business, man, right? We spend all our money drilling a well and then we turn it on and see what we got. So by definition, even if you're an engineer's engineer,
you may end up owning a plane.
Yeah, exactly. Or not.
Or losing it. And then working to get it back.
All right. So we got 10 minutes. Let's do this. Let's hit on Exxon next week when we do BDE. We'll go through there because I've actually got a little bit of insight there. We'll do that. Let's jump into Enverus selling, which is a cool story.
Why don't you?
So
you're
no. So Alan,
you're a friend of Alan.
Yeah, I am a fellow Rice guy. So Alan Gilmore founded Drilling Info in 1999, and he actually laid out kind of a tweet. And Jamie, maybe you can put the tweet up on the broadcast here. But he basically walks through how he raised $1 million, what the valuation was, and then later on brought in various private equity people as he sold all along the way. He went on kind of he started off as just data, right? He was grabbing data, cleaning it up, making it available to clients. Then they went on a software blitz of buying various software companies, all the while cleaning up data, making data better. They've become the indispensable data source to the industry. I think a lot of that is because financing sources, investment banks, commercial banks all trust their data. And so if that's the accepted data source, you just have to use it. Clearly, they have pricing power because everybody bitches about them in terms of how much they cost. And most recently, Hellman and Friedman sold to Blackstone. It was $6.5 billion, $3 billion of that debt. Part of the story that I think is cool, Alan also sent out a email saying that he was always morally opposed to debt. But once they started using some debt, particularly making the acquisitions, it worked really well. And he claims I was wrong about debt. So anyway, fascinating development in our world because I don't, kind of like if someone was going to marry my daughter. Hey, Blackstone, what are your intentions for Enverus? I would like to know because.
Well, I called you last week as a PE guy and said, okay, this is PE to PE. Why this profile of transaction?
Yeah, and so one of the things that has been, I think, underappreciated by the market, because the historical path for a quote unquote tech company was to, get venture capital, then go public, right? And what we've actually seen in technology world, given what's her face, Lena at the FTC and others, is we've actually seen a lot more in the way of technology platforms getting to a good run rate of cash flow, but maybe not having unicorn type status to be able to go public in a big way. And we've seen a lot of private equity just step in and buy. And private equity generally buys cash flow. I mean, the whole basis of private equity was you had a company that was kicking off, $100 million of cash flow, and it traded for $500 million in the market. You could use $400 million of debt and $150 million of equity to buy the thing, and then pay down the debt over time. And that's how you made your return on equity, was using more aggressive debt and different capital structures. So generally all private equity is about cash flow. Now, as more people do it, you have to be able to bring operational expertise to it. Hicks Muse would partner up with Clayton, whatever their names were, that were the operational gurus to help. So it's going to be interesting, long-winded way of saying it's going to be interesting to see what Blackstone's plans are. Did they literally just buy a cash flowing business and they plan to cash flow it up? They plan to raise prices on data until they start losing customers? Or in this world, do they have a big, huge AI game plan? I do find it interesting that, you had kind of your AI world not showing up as the buyer here. Palantir didn't show up to buy. Microsoft didn't show up to buy. So,
yeah, and in that whole continuum of acquisitions to build the original drilling info into something that is a data and really an insight powerhouse. The most notable one to me in those more recent years of acquisitions was RS Energy. When I worked on the institutional equity side, I was a client of the original predecessor to RS, which was Ross Smith. It's a Calgary-based research, and at one time they had a trading relationship, but it was really something you couldn't get anywhere else on Wall Street, and that was a lot of technical depth and expertise. A lot of geologists, geophysicists, reservoir engineers, et cetera. And then prior to the Enverus acquisition of Ross Smith, which turned into RS, they were backed by Warburg.
Yeah.
And Warburg spent, I think, upwards, certainly north of $100 million during their portfolio ownership of RS in really building the digital capability of really the original Ross Smith research franchise. And then that folded into Enverus, more on I think the client service from a research using the horsepower of better and more data than anyone else out there in the market had. So I posted it, or I captured one of Alan's tweets. I didn't find the one you were talking about, which is more of the historical walkthrough, but he talked about bundling, and they were out there accumulating all these very high cost and exotic data sets that had extreme value, but to much narrower set of potential customers and clients, and that they were being advised not to bundle, and they did. And he talks about kind of the multiple comparisons, and they would sell 4 bundled data sets for 20x when you could have sold one of them to the perfect client for 100x. Yeah. But they overcame it with volume. I mean, they now have 8,000 clients in 50 countries globally.
The risk in the AI world to those guys is just how good AI is at scraping public data.
Right.
And so it's going to come down to proprietary data sets that ultimately keep value in this world, because anything available publicly, anyone can scrape.
Instantaneous commoditization.
Exactly.
Yep.
That being said, Alan, we'd love for you to come on BDE and tell us all about it.
I want to hear all the war stories.
Yeah, no, Alan's the best. Alan and I did back, gosh, I think it was 4 years ago, sat down at my table in front of my bar on the second floor and shared a bottle of wine, and we just taped it, and it's on Collide somewhere.
Nice.
There was a bit of a vibe of the two old men Muppets that sit up in the, but anyway. All right, Collide, hope you enjoyed today. If you want us doing more live, I think we're kind of happy to do it. The only problem, you know what the problem is doing with these live?
What's that?
I have to go to the bathroom. drank too much of this. But
all right, we'll see you back in regular format next week.
Sounds great. Thanks, everybody.
Thank you.